All right, let's dive deep into the world of Indian mutual funds today. We're going to unpack some of these, what are they called?
Scheme information documents.
Right, scheme information documents, or SIDs. We've got a stack of them from some big names,
Oh, yeah.
Axis, DSP, Kotak Mahindra,
Thought? Oh.
Tata, and Union Mutual Fund. We're basically getting a behind-the-scenes look at how they do what they do. Their strategies, what they're holding, even the risks they're dealing with.
It's like getting a sneak peek into their playbook.
Exactly. Most people just see the marketing, the brochures, but
These SIDs.
yeah, the SIDs, these are where the real story is. So are you ready to see what's really going on?
Absolutely. Let's jump in. It's fascinating to see how different their approaches to investing can be.
Right. Even though they're all mutual funds,
Yeah.
their strategies are all over the map.
Yeah, totally.
Right.
I mean, take the DSP Business Cycle Fund, for example. Their SID mentions they use macroeconomic indicators to make decisions.
I saw that, and it's not just like a general overview. They actually went all in on rising interest rates.
Really?
Yeah, and it paid off big time last quarter.
Wow. That's some serious forecasting.
Right. It's like they're not just riding the market wave, they're trying to predict where the economy is going.
And then position themselves accordingly.
Exactly, which means they might not even invest in every sector all the time.
Right. They're very selective, which is so different from, say, the Tata BSE Select Business Group's Index Fund.
Yeah, that one's much more
Passive.
passive, yeah.
Yeah.
They're just tracking that specific index of, big Indian companies.
Yeah. It's like they're following a set path, trying to match the market's performance.
Not necessarily beat it.
Exactly. So if you're looking for a more hands-off approach.
That might be the way to go.
Right. But then you have Kotak Mahindra, and they've gone in a completely different direction with their transportation and logistics fund.
That one caught my eye, too.
India's transportation and logistics sector is huge, and they're laser focused on it.
It's a big bet on the movement of, well, everything.
Goods, people, you name it.
Yeah, it makes you wonder what they know that we don't, right?
Right. Like, do they have some inside scoop on the future of delivery or something?
Maybe. But then there's Union's Active Momentum Fund, and they're relying on something else entirely. Algorithms.
Oh, yeah, that's where things get really interesting.
They built this quantitative model to pick stocks that are, trending upwards.
Trying to ride that wave of momentum, hoping those stocks keep climbing.
But isn't that also risky? What if that momentum suddenly stops?
Oh, absolutely. Momentum investing can be volatile. It's like trying to time the market perfectly.
Why risk, high reward, right?
Exactly. And speaking of risk, there's another thing that came up in a lot of these SIDs.
What's that?
Derivatives.
Ah, yes, derivatives. They always sound so complicated.
They can be, but think of them like a lever.
A lever.
Yeah, they can amplify your gains, but they can also magnify your losses.
Oh, I see, like a double-edged sword?
Exactly. And the DSP Business Cycle Fund, for example, they specifically mentioned using index futures.
So they're betting on the future direction of whole stock market indexes.
Precisely. Which can be very profitable if they get it right.
But also riskier if they get it wrong.
Of course. But you know what else is interesting? These SIDs actually lay out a bunch of different types of risks that these funds are facing.
It's like they're giving us a glimpse into what keeps fund managers up at night.
Exactly. And I think understanding those risks is crucial for any investor, wouldn't you say?
Absolutely. Let's hear it. I'm all ears.
Well, let's start with credit risk, which is the possibility that, a borrower just doesn't repay their debt.
Yeah, that's a pretty basic one, like lending money to a friend and hoping they don't skip town.
Exactly.
Yeah.
But it applies to any investments in bonds or debt securities. And the Kotak Transportation and Logistics Fund actually highlights some specific risks tied to auto loans and commercial vehicle loans.
Oh, interesting. So they're acknowledging that if those loans go bad, it could affect the fund's performance.
Right. It's a reminder that even those seemingly safe debt investments can be risky.
Got it. What else is there?
Well, there's interest rate risk, which is all about how bond prices can change when interest rates change.
I think a lot of people have felt that one lately, right? Like when interest rates go up, your existing bonds with lower rates suddenly aren't as valuable.
Exactly. And it's a constant balancing act for funds that invest heavily in bonds.
So what else? We've got credit risk, interest rate risk.
Well, there's liquidity risk, too, which is how easily you can buy or sell an investment without affecting its price.
Right, because if a fund needs to sell something quickly and it's not very liquid,
It can become a problem.
like trying to sell a house in a hurry.
Exactly. You might have to lower the price just to find a buyer.
Which isn't ideal.
Not at all. So finding the right balance between higher return, few liquid assets, and having enough cash on hand is key.
Okay, so we've got credit risk, Interest rate risk, liquidity risk, anything else keeping those fund managers up at night?
One more worth mentioning, reinvestment risk.
Reinvestment risk. I'm not sure I'm familiar with that one.
It's the risk that when a bond matures or pays interest, you might not be able to reinvest that money at the same or a higher rate.
Oh, I see. So if interest rates have fallen since you first invested, your returns on that reinvested money will be lower.
Exactly. And that can really impact a fund's performance over time.
Yeah.
It's a tough challenge for those fund managers.
Okay, so we've covered the basics of mutual funds, their different strategies, this whole world of derivatives, and all these risks they're facing. What's next on our deep dive agenda?
Well, now I think it's time to shift gears and talk about you, the investor.
Okay, what about me?
What do these SIDs tell us about the things you need to know before investing your hard-earned money?
All right, let's get into it. I'm ready to hear all about it.
Let's do it. All right, so let's dive into these investor-specific details. These SIDs are packed with stuff that any investor should know before jumping in.
Yeah, it's like reading the fine print.
Exactly. Like those terms and conditions everyone skips over.
But in this case, skipping them could really cost you.
Oh, absolutely. So let's break it all down.
Okay, sounds good.
First up, we've got load structures. These are basically the fees for buying and selling those mutual fund units.
Like the entry and exit fees.
Right. It's kind of like paying a cover charge at a club.
And maybe a little fee to leave early.
Exactly.
I noticed some funds have different approaches, though.
Oh, yeah, definitely.
Like the Axis Momentum Fund has no entry load, but then there's a big exit load if you sell your units within 30 days.
It's pretty common. There's a way to discourage people from, just jumping in and out of the fund too quickly.
Like they want you to stay for a while.
Yeah, exactly. Then you've got the Kotak Transportation and Logistics Fund. They have a similar exit load, but no entry load.
So you can get in for free, but leaving early will cost you.
Right. They're trying to attract investors while still encouraging them to think long term.
Makes sense. What about expense ratios? Those are always important.
Oh, absolutely.
Yeah.
Those are the ongoing fees, the fund charges to cover its
Yeah.
operating costs.
Like management fees, administrative stuff.
Right. Think of it as the cost of keeping the lights on.
And those can really add up over time, right?
Oh, yeah, definitely. Even a small difference in expense ratios can make a big difference in your returns down the line.
Got it. So what about redemption procedures?
That's how you get your money out of the fund when you're ready.
Pretty straightforward, right?
Usually, yeah. You submit a request, and the fund processes it within a certain time frame.
But are there any, hidden gotchas I should be aware of?
Well, it's always good to check for any minimum holding periods.
What are those?
Some funds might require you to hold onto your units for a certain amount of time before you can redeem them.
Oh, I see. So they're trying to, prevent people from constantly trading in and out.
Exactly. And it helps them manage their liquidity, too.
Makes sense.
Yeah.
What about taxes? Everyone loves talking about taxes.
Well, you can't avoid them, that's for sure. But the good news is these SIDs actually give you a decent overview of the tax implications.
Oh, that's helpful.
Yeah, they explain how capital gains are taxed, what rates apply, things like that.
I saw that the Tata SID specifically mentioned different implications for resident and non-resident investors.
Right. And the rules can also vary depending on the type of fund you're investing in.
It's a good reminder that understanding your tax obligations is just as important as understanding the investments themselves.
Couldn't agree more. But, beyond all these investor-specific details, I think it's also worth peeking behind the curtain a bit.
What do you mean?
Well, these SIDs give us some insight into the roles of the asset management company, or AMC, and the trustees.
They're like the people running the show.
Exactly. The AMC is the company that actually manages the fund's investments.
They're the ones making the buy and sell decisions.
Right, they're calling the shots. And the trustees are kind of like the watchdogs.
They make sure everything is on the up and up.
Precisely. They oversee the AMC and make sure everything is running smoothly and in the best interest of the investors.
And of course, SEBI is keeping an eye on everything too, right?
Oh, yeah, absolutely. The Securities and Exchange Board of India, they're the regulators. They actually mandate these SIDs to ensure transparency in the industry.
It's like they're making sure everyone plays by the rules.
Exactly. And I even noticed the SIDs include sections on penalties, litigation, that kind of stuff.
So they're not afraid to crack down if someone's misbehaving.
Nope. It's all about protecting investors and maintaining the integrity of the market.
Okay, so we've got the AMCs making the decisions, the trustees watching over them, and SEBI lurking in the background, making sure everyone stays in line.
It's like a system of checks and balances.
Makes sense. But something else that really stood out to me in these SIDs was the focus on ESG investing.
Oh, yeah. Environmental, social, and governance factors. They're becoming a bigger and bigger part of the conversation.
It's like investors are starting to care about more than just making money.
Absolutely.
Yeah.
They want to know that their investments are also doing good for the planet and for society.
Like they want their money to grow, but they also want to make a positive impact.
Exactly. And that's a trend I think we're going to see a lot more of in the future.
I agree. So we've covered a lot of ground here. Investor-specific details, the roles of the key players, even the growing importance of ESG investing.
It's like we've peeled back the layers of these SIDs and uncovered a treasure trove of information.
And hopefully our listeners are feeling more informed and empowered to make smart investment decisions.
That's the goal.
So as we wrap up this part of our deep dive, I want to leave our listeners with one final thought. What's the biggest takeaway you think they should keep in mind?
Well, I think the most important thing is to remember that investing isn't just about picking the right stocks or funds. It's about understanding the bigger picture, doing your research, and making choices that align with your values and your goals for the future.
Well said. And with that, I think it's time to move on to the final part of our deep dive. It's amazing how much we've learned from just digging into these SIDs.
Yeah, like they've handed us this roadmap to understanding how these funds really work.
And I think one of the biggest things our listeners should take away from all of this is that not all mutual funds are the same.
Oh, definitely. They're not all created equal, that's for sure.
Right. You've got some that are actively managed, trying to beat the market.
And then others that are just passively tracking an index.
Yeah, and each approach has its own risks and rewards, right?
Absolutely. So you really need to find a fund that matches what you're looking for, your own personal goals.
Right. Your risk tolerance, even your values.
Especially with the rise of ESG investing, like we were talking about,
Yeah, it's not just about the numbers anymore.
right? People are starting to think about the impact their investments are having on the world.
And that's a good thing, I think.
I agree. It's pushing companies to be more sustainable, more responsible.
So if anyone's out there feeling overwhelmed by all this information, what would you say to them?
Well, I'd say don't panic. Just start by asking yourself some simple questions.
Yeah.
Well, like, what are your financial goals? How much risk are you comfortable with? What kind of impact do you want to have?
Right, once you have a better sense of what you're looking for.
Yeah, then you can start narrowing down your options.
And these SIDs, they can really help you with that.
They're like a window into how each fund operates.
You can see their strategy, their holdings, their fees.
It's all right there in black and white.
And of course, if you're still feeling lost, there's no shame in getting some help.
Oh yeah, definitely. Talking to a financial advisor can make a huge difference.
They can help you sort through everything and figure out what's best for you.
Absolutely.
So as we wrap up this deep dive, I have one last question for our listeners. What surprised you the most about what we uncovered today?
I'd love to hear their thoughts. And remember, investing is a journey. It's about learning and growing, making informed decisions, and building a future that you're proud of.
Couldn't have said it better myself. Thanks for joining us on this deep dive into the world of Indian mutual funds.
It's been a pleasure.
Until next time, happy investing.